Hello, today is December 19th, 2020. You know the routine. We do our disclaimer first and go over our calls. It's my plan for trading on Monday, the 21st of December, 2020. And there's no guarantee I'm right, so trade at your own risk. And here's my email, mejt.trades@gmail.com. Well, let's review what we said. We said we had mixed signals. Commonest thing was a gap and prompt move outside the day's range. We got that. I said we gap up, hit a new high, or having a straight line drop. And we gapped slightly. Maybe that isn't a gap. Whatever it is, we hit a new high, and then we had a straight line drop too. Frankly, it wasn't as much of a move. It wasn't as much of a move at the open as I was anticipating, but you can't always get everything you want. So we did hit a new high. We did have a straight line drop too. This was the pattern with the early high, and we also have the pattern with the early high when trading resumes on Monday. Mejt said this drop wouldn't stick, said this drop wouldn't stick. They all recovered. It did give a sell in the afternoon, but it just means there's a lower target, and that printed immediately. So that worked, but there wasn't really a trade. Well, here's the long-term chart. We're still at this resistance level. Here's support. Now the different ways to read this. One way is a cup with the handle sloping up. It's an unstable pattern. And once this lower trend line breaks, the target is to drop and hit the low of the cup, and that's in the 3200s. So if this trend line breaks, it's big trouble, but it's not obliged to break. And again, we have to clear this resistance here to reduce the risk of that happening. Well, we've shown this chart a number of times. Here's our upper trend line. Here's our lower trend line. And if you look at Friday's low, we stopped right where those trend lines met. So that's the support level. And if support holds, we could still go up. But if we gap under this low, that means support fails, and then the market's in big trouble. Doesn't mean we have to gap under the low, but I'll tell you, this rally here is kind of hard to count. I don't think it's a clear count. I've seen some people count it as 5 waves. I don't think that's what it is. There's too much overlap for me. And if this is the proper count, that's a logical place for it to end. Let's focus it at the top here. This is still a valid count here. We're starting to get a wave count on the downside, which certainly is compatible with this being over. And what's very suspicious here is we hit a new all-time high, promptly rejected it, and closed red. And that's always negative. Now, it's not negative if you invalidate it promptly by overtaking this high. But if we can't overtake the high fast, there should be more trouble. Let's take a look at the longer term picture. Well, this is my alternate count. It interprets this as the 5th wave of a huge bull market that started in 2009. You can take the last prior consolidation and use it as a measuring device, and when it works looking retrospectively, it'll often work looking prospectively. First, you'll set this at 100%. Here's your 0, here's your 100. You go to 78% and you nail a low right here. Now, it doesn't always work, because when you go to 61.8, you get this, which isn't very impressive to me. When you go to 50, you nail this. That's pretty good. When you go to 38.2, you get this high, otherwise it isn't very impressive. And then when you get to 23.6, there's your low, right on the nose. Now when these work in one direction, often they'll work in the other direction. And the catch is it doesn't work every single time. So here's your 100. We'll set it at 78.6. That's right there. That's pretty good. Then you'll set it at 61.8. Well, you get this one. Not really all too bad. And then you set it at 50. And it hits that one right on the nose. That's impressive stuff. So what happens when you go to 38.2? Bingo. That's where we are right now. Well, the next one, if this doesn't work, the next one's around, I think, 35. So using this methodology, we have a good Fibonacci argument for this top holding, just as it's worked at all these other levels. Again, there's nothing that works every time, but certainly it's a time to be cautious. Here are my calls for next week's patterns. Merry Christmas to everyone. Mixed signals. Let's go over the routine. Monday's pattern has a early high. Doesn't mean you won't gap down. Typically, it's a rally day with a final hour high. Failure is a straight line drop. It's positive. We had a rally into the close. You move into the close on Friday. Almost always it follows through Monday morning. But if it doesn't, and that's an if, we gap down strongly, it's very negative. It is negative. We hit a new all-time high and closed in the red. Quite frankly, this is the wrong time of year to look for a market peak. I had been looking for a rally into year-end, followed by a sell-off beginning in January. And until we reverse, which hasn't happened yet, you really can't rule out a blow-off top. Nothing's impossible. But a lot of things are coming together here. Public bullish sentiments at an historic extreme. Insider buying of stock is at an historic minimum. It's really off the charts. The waves can be counted as completing this leg up for its strong Fibonacci resistance. And if, underline the word if we gap under Friday's low and if we follow through, it's hard for me to see how we can recover from this. If we do drop smartly at this time of year, it's very, very, very negative. Now that hasn't happened yet. It's just a cautionary alert, but a lot of things are coming together here. Friday's high is one more candidate for the end of this rally. Fingers crossed. We're coming to a very critical time, or it's strong resistance. We just bounced off strong support. And as the tautology goes, either support holds or it fails. Either you go up or you go down. And if support fails here, it could be a long way down. And that's today's call.